Alibaba stock has not had a great 2018, where it's down over 20% so far year to date. But does this mean that the company itself, the fundamentals of the company, are struggling? Or is this a buying opportunity for the stock where we should go and buy some Alibaba stock? Let's find out. Welcome back to the channel. If you're a new investor here, make sure to hit that subscribe button down below to join the community. I release new videos on stocks, stock market, investing weekly. So if you're interested, don't forget to subscribe down below. And if you're an Alibaba investor or you're looking to purchase some Alibaba shares, make sure to drop a huge like down below as well. Okay, so first let's start off with some news that came out this past weekend. And if you weren't aware, Alibaba actually had its annual Singles Day sale on November 11th. And this, of course, set brand new records for the company. But what I find absolutely hilarious is how the media is trying to spin this as kind of a negative for the company, even though they set brand new records. Take a look at this title here to see how they spin this. Alibaba Singles Day tops $30 billion, but growth rate plunges. Oh my god, growth rate plunges. What are we gonna do? This is not good for the stock, right? So let's think about this logically. Yes, the growth rate did decrease year over year, but they also did pull in over $30 billion in a single day. Try to comprehend that for a second. In one day, $30 billion was pulled in through Alibaba's platform, and the media is trying to spin this as a negative because it wasn't as high of a percentage as last year. Sometimes you just gotta think about this logically. It doesn't make sense to continue growing at such rapid rates percentage-wise when your numbers are just so large. When you have $30 billion of revenue coming in a single day, you can't expect to grow at 30, 40, 50% every single year. Eventually that is gonna catch up to you and you are gonna slow down in the percentage department, but you are still pulling in massive amounts of revenue and profits year over year. And that's why, in my opinion, I think the media is really full of it when it comes to Chinese stocks. They're just trying to milk as much as they can with the whole fear around the trade tensions. And this is a perfect example about that because right now everyone's bearish on Chinese stocks. And by posting a bearish headline, it attracts more attention. And then investors look at that and some investors fall for that. And of course that helps drive prices lower. But here on the channel we look at facts. So let's look at some facts from Alibaba's Singles Day event this year in 2018. So as we can see, during the event, Alibaba pulled in around $30.7 billion in revenue in a single day. This is after pulling in $10 billion in the first hour. That means that they pulled in $166 million per minute in the first hour of the sale. So comparing this Singles Day event to large events that we have here in North America, like Black Friday or Cyber Monday, it actually doesn't even compare on any scale. Singles Day is significantly larger. And to top this off, they also posted that they surpassed last year's $24 billion in revenue in Singles Day in a mere 16 hours. So how's that for growth year over year? Oh, but here comes the bad news. We can see that the growth rate has slowed down or fallen from 39% to 27% year over year, and was at the low end of what analysts were estimating. Also, to add to this, this was the smallest rate in the event's 10-year history. But what I have to say to that is that this is also the largest amount of revenue that they've ever brought in its 10-year history. So you gotta look at both sides of the coin here. In fact, if we look at the chart here that TechCrunch has posted, we can see that they've taken some data that Alibaba has provided over the years, and you can see that revenue is still healthy and is still growing at an incredible clip, almost exponentially. And this is despite all the fears around the trade war, despite the fears around slowing growth, and despite all the fears around Alibaba's stock price in general. So as an Alibaba investor looking at the facts here, what does this really tell us? Well, we can see that although, yes, it is theoretically slowing down in a percentage-wise because we do have large numbers here at play, $30 billion is not a small number, we are still growing year over year, and we are still growing significantly, 27% for such a large company year over year. We're still setting records every single year, we're still pulling in profits every single year, and we're still operating as a very profitable business. So as the stock price continues to make new 52-week lows, it presents investors an opportunity here to keep adding into their position to lower their cost basis here in Alibaba. So I personally do have a stake in Alibaba, and at one point in my portfolio, it was my largest holding. Initially, when I got into the stock, it was trading at around $125 per share, and I saw massive growth in the company. And we did see that growth in its fundamentals. We did see that growth even in the stock price, where it went up over $200 per share. And I did scale back my position since then, but I still have a pretty sizable position here in Alibaba. I've been considering adding more to this position because it has gotten back to where my entry price was, and I do think that this will go up significantly in the long term. But the trade war tensions just keep pushing this price lower and lower, and it just keeps giving even more and more values. So I'm in no rush to really add more to this position, but I did want to say that I am interested in adding more to my Alibaba stake right now. The issue I see, like I said, is no matter how strong Alibaba's fundamentals are, no matter what records they set, no matter how much they grow year over year, the macroeconomics surrounding the trade tensions between the US and China is what's pushing this stock down, along with many other Chinese stocks, and it's what's going to keep pushing Alibaba to make new 52-week lows week after week. A good example was actually after its recent earnings, where it posted very strong numbers. It still wasn't able to break out of a channel that it's stuck in this downward trend. And until it can prove that to me, I don't necessarily think that we've actually seen a bottom or some sort of recovery in Alibaba stock. So what could you do here as an investor? Well, there's a couple things. The first is, if you do need the money in the short term, say in the next couple of years, it may be best to wait on the sidelines here, because we don't really know how long this tension can go on between US and China. Alibaba could drop below $100, which would be absolutely insane, but that could happen if this tension keeps going. So I just kind of wait on the sidelines here if I needed the money in the next couple of years. However, on the flip side, if you do plan to hold this for the next, say, 5, 10, 15 years in your portfolio, you don't need the money right away, then this is an ideal opportunity to just keep adding into your position to build a very strong position at a very low cost basis, in my opinion. There's no doubt in my mind that when we do see some sort of trade resolution, that Alibaba is going to be one of those stocks that rallies incredibly hard. And there's no doubt in my mind that it'll also surpass the $200 per share threshold that it did surpass earlier this year, especially since it's only being valued with a forward PE of around 21.5, when other large companies similar to this in the space, like Amazon, are valued at much, much higher PEs. And if we look at TipRanks over here, we can see that analysts are extremely bullish on this company, with 16 of them with buy ratings and none of them with a sell or hold rating. They also have a combined upside of 48% on this stock, sitting at over $200 per share at closer to $215 per share. And what I also found interesting here was, if we look at some hedge fund information, we can see that they're extremely bullish here and have been loading up on shares with this weakness that we've been seeing this year in Alibaba. And I also think that this current quarter, which you don't see any results yet, will be the largest inflow yet for Alibaba in 2018, because we did hit prices as low as $130 per share, which was an absolute steal for this stock. If you want to see more details on this stock or any other stock on TipRanks, I'll leave a link down in the description below, linking you to Alibaba. You can search any other stock in there if you want. And you can also sign up for free to get more insight into other stocks that you follow in your personal portfolio. But either way, guys, if you've been following the channel for a little while, you know that I've been a Alibaba bull for a very long time, and I believe I was one of the first, if not the first, financial YouTuber here to actually be so bullish on Alibaba. A lot of other financial YouTubers now are hopping on board. They are seeing the value because the price has dropped. But remember, I got into the stock at around $120, $125 per share, so I've been in it for quite a while. I've ridden the wave from down here all the way up to $200 something per share, all the way back down. But over the long term, I think that this will be well over $200 per share. It was my largest holding at one point, and it could be back to my largest holding at some point in the future. The fundamentals of the company have not changed for the worse. In fact, you can see that their growth has been even stronger year over year. So really, the bottom line is, if you can wait out these trade tensions between the US and China, this stock could potentially reward you significantly in the future. So let me know in the comment section down below what your thoughts on Alibaba is, and if you kind of have the same or similar mindset to me when it comes to this stock. But either way, guys, I hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one. Peace.